You were explaining exactly why you, as Morgan & Co., developed this index. You say that we didn't really have an index that was specific to the continent in measuring living standards.
Yes. So we then looked for something that's a bit common in Southern Africa. Of course, Coca-Cola is quite present across Southern Africa. We said, no, let's track the price of Coca-Cola across these geographies and come up with something that we can use really to measure how some of these currencies compare in terms of whether they're overvalued or undervalued. So we come up with the Colanomics index.
Okay. So the Colanomics index, and you have measured it against the US dollar as the base currency. So according to this table that I'm looking at in front of me, is it Coke is more expensive in Malawi of all countries? So do explain exactly what the findings of the analysis have been.
Okay, so what we then picked up is we found that it then helps you in terms of measuring productivity levels across these geographies. So we find in countries where the production capacity is actually quite good, or there are more efficiencies, it then becomes cheaper to produce at a profit. So in countries such as Malawi, even Zimbabwe, you find that it will be slightly expensive. But also there are other dynamics that then also come into play, like purchasing power. I think for countries like Zimbabwe, we're seeing that disposable incomes are coming down. So players really are a bit limited in terms of how they can actually price Coca-Cola.
But just honing in on purchasing power, so this index, according to its findings, is saying what? It's saying that it's you need more money to essentially live in Malawi and Zimbabwe, and that Zambia is one of the countries whereby the standard of living or the purchasing power of consumers there is a lot higher.
Yes, definitely. So it then helps you in then comparing how these manufacturing industries are actually operating. But what we saw really is that, generally, most of these African currencies tend to be overvalued, simply because, governments also try to come in to just, protect, consumers and also manage inflation. But one thing that's also interesting that we found out, especially about Zimbabwe, is that if you use the USA as your benchmark, you find that the implied rate is somewhere close to the interbank rate that's actually in Zimbabwe. So it's around 16, 17, about. But then if you then tweak it a bit and then you use South African prices, you then actually get something that's close to the parallel market rate, which shows you that the parallel market is a bit efficient in terms of actually a price discovery.
Because I'm wondering if it was difficult to do this comparison in Zimbabwe, given the the multiple currency changes and the multiple currencies that are used in that economy to purchase goods. How did you overcome that?
Okay, so we tend to use, most of the times we use the parallel market rate, but one thing that's more official or that's more practical is the odd mutual implied rate, which sort of shows you where the price of the Zim dollar is actually from a practical perspective.
All right.
Yes.
I mean, Batsana, just putting the focus back on Zimbabwe's markets right now, I think the latest news coming out is that there has finally been a deal between the government and public workers around a pay increase. Reportedly, they want more, but undoubtedly continued strain on the government fiscus, continued strain on the economy. What can you tell us about the investment case for Zimbabwe? You said that you have been here meeting a host of clients. What are the main questions that have been coming out? What have been your answers been?
Okay, so it was actually an interesting trip because we got an opportunity to meet with fund managers in Cape Town that are operating there, that have been involved in Zimbabwe in one way or the other. So really, the general feeling is negative. So Zimbabwe is off the radar amongst most of these players in the sense that the political impasse and also the growth prospects are quite low. Why they continue to sort of keep an eye on Zimbabwe, I think they also appreciate that in certain areas, things such as companies that are actually well managed. You've got good companies such as Delta, where multinationals are involved. So they want to keep an eye, and also they appreciate that the market is looking very cheap from a USD perspective. I think historically the Zimbabwe Stock Exchange market capitalization was around 3.5 billion. So right now, as I speak, using the old mutual implied rate, we're looking at a market cap of 1.2 billion. So which shows you that there is a case really to buy stocks at very low prices or very depressed levels, and then have a sort of a long-term feeling. But for most of these funds, it's really about timing. They have to understand what will happen, especially on the political front, but also in terms of the exchange rates, foreign currency shortages, because what you want really is to be able to move money in and out easily, which is quite important.
But just a quick one, because I think that the most important thing would be in terms of taking advantage of cheaper stock prices, making sure that you pick quality picks, that won't get you into trouble, particularly with the changing political landscape. So what would your picks be? What's your advice on that front?
Okay, currently what we like, given the dynamics in Zimbabwe, I think what's critical is for companies to be able to generate foreign currency. Because with foreign currency, you can then import critical raw materials that you can then feed in terms of production. So we're seeing opportunities in exporters. Your Padenga Holdings, they do crocodile. They're also invested in a gold mine. We also do have companies such as Ariston. They do horticultural activities. But we also see opportunities in gold miners. I think the price of gold is actually picking up. So there's also an opportunity there. And then there are companies that have regional operations, regional plays, companies such as Simbisa Brands, where you're getting close to 35% of EBITDA outside Zim, which sort of hedges you a bit from Zim risk.
Sure.
So Simbisa Brands and also Sitco International, they're doing quite well in new markets in Zambia. They've got new projects in Kenya and Nigeria. So those are sort of the stock picks that you should consider. But however, from a long-term perspective, we did an analysis to say, let's look at the share price movements in real terms in 2019 and actually see what happened in terms of gains. We found out that about 52 of the 57 companies that we studied were actually down in real terms. Which shows you that the prices are depressed, and it could be an opportunity to pick up some assets.